The other topic in Chapter 7 is the petty cash. Um, and what petty cash means is the cash on hand. Okay. Um, the majority of companies, they keep all their cash in the bank, but some of them, not only that they want to keep cash in bank, they also want to keep a little bit of cash on hand. It means they want to have portable cash, cash notes in a box or in a register machine to use it for the day-to-day expenditures, or maybe to give change to customers and stuff like that. And usually when it comes to petty cash, it's there will be more chances for cash to be lost, um, maybe small amounts, and companies have to try to control that as much as possible. It's harder to control petty cash or portable cash than cash in the bank, um, especially that all your payments will be through the cash, not the check. Okay, now we will talk about the journal entries associated with petty cash. How do we start? What's the first step? And then what happens after that? Um, so the first step is to establish petty cash. Um, a company that we will say that they do not have a petty cash, and they decided to establish $200 petty cash. So I do have an example here. It says, on March 1st, XYZ company creates a petty cash fund of $200. The custodian cashes the $200 check and places the currency in the fund box. Custodian is the person who's going to take care of that petty cash. It can be the accountant, or maybe he can be anyone in the company, maybe the store manager if it was a retail store, or a salesperson, or just a supervisor. So he doesn't have to be an accountant. So let's assume that we will have two different people involved in this. The accountant, which is the person who's going to give the petty cash, or his to 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 pay, I would say, petty cash to the custodian. Okay, and the second person is the custodian. Right, so two different people. Just to make it easier for us to understand what will happen now. Okay, so first step, establish petty cash. There's no petty cash. We will come up with the petty cash. The accountant will give a check to the custodian for $200, and then the custodian will just go to the bank, clear the check, and get the $200 in cash, and he will have them in his box. So that by itself is an accounting transaction. It has to be recorded. So we're going to create a separate cash account for the petty cash, and we're just going to call it petty cash. And it's going to be an asset as well, just like cash, just like a normal cash account. So we're going to transfer cash from the main cash account to the petty cash account, okay, from one cash to the other cash. So the main cash account will decrease and the petty cash will increase. So we have to debit petty cash and we're going to credit cash. $200, $200. Okay, so now the custodian has $200 cash, and then the reason why companies want to maintain a petty cash is one of the main reasons is to pay for the day-to-day expenses, which is not always easy to pay through a check. Sometimes you need just portable cash to make it easier, and sometimes you cannot pay by check. I mean, like what if you want to just buy from a supermarket, from a small mini market, some supplies, or I mean some maybe I would say cleaning stuff maybe, or stuff like that, or maybe lunch. If you want to buy lunch for employees, you go to a small restaurant, you're not going to give them a check, you need the cash. So whenever he spends money out of the petty cash, he will collect receipts. Remember, he's not an accountant, so he does not record journal entries every time he spends money. All he does is to collect the receipts, and then he might be filling up tickets, or sometimes we call them vouchers. So he will have a voucher book, and he will just fill up the information about everything he spent money on. But at the end of the month or a week, or whenever he feels that he wants to hand out all those invoices to the accountant, he will just go ahead and give him the invoices to the accountant, and then the accountant will record the journal entry for them. The custodian doesn't have to do that because he's not an accountant. So let's see here. So at the end of March 31st, so a month later, the petty cash fund holds $120 in cash and $80 in petty cash tickets. That means he spent $80. He had 200, he spent 80, his leftover is 120. Okay, and those $80, for example, 50 out of 80 was for office supplies, and then $30 was for delivery cost. Again, all he did during the month is to collect cash, collect receipts and pay cash. And then now he feels that he wants to replenish. We call it replenish in accounting. It means he wants to go back to the accountant and get cash back to replenish what he spent. Okay, refilling, if you want to call it. So he goes to the accountant, and then the accountant will give him a check for $80 that he spent, and the custodian will give the accountant the receipts for that. And then the accountant will go back to his office and record the journal entry for that. Okay, so what is the journal entry that the accountant has to record at that time? He has to record the expenses. He has receipts for them. It shows, one receipt shows $50 for office supplies, so he will debit. He's going to consider that an expense, of course, or maybe not an expense, but just office supplies. So debit office supplies for $50, and then debit the other expense, which is delivery expense. We can just call it delivery expense. Delivery expense for $30. And then what is going to be the credit? Someone might say, well, we have to credit petty cash. Remember, the custodian, if the custodian records a journal entry, then it will be credit petty cash. But it's not the custodian who's recording that. It's the accountant. From the accountant perspective, all he's doing is giving cash to the custodian, and he got receipts for that. He gave them cash for how much? For $80, and he got receipts for also $80. So think from the accountant perspective. He gave $80 out of the normal cash account because he gave him a check for $80, and then he got receipts for it. So it's as if he paid $80 for those expenses, if you think about it. So that's why we have to credit cash, not petty cash, for $80. He gave him a check for $80, and he got receipts for them. Okay, so you will notice that every time you will have a replenishing journal entry similar to this one, you're never going to credit petty cash. You're always going to credit cash. All right. And if you will think that, well, what about petty cash? So if we have a T account for petty cash, it's going to have $200 debit, and it's never going to be credited. It will hold the $200 all the time. So how come we're spending money? So how come we're not crediting petty cash? We're spending money out of petty cash, so we should be crediting. That's what someone might say. And I totally agree. But we also have to remember that we're maintaining $200 all the time. And in a very short period of time, before even we get to the end of the month, we will replenish it back and get it back to 200. So it goes below 200, but then very soon it goes back to 200. It goes down to 200, below 200, and then back to 200. So we're maintaining 200, and then it just temporarily goes below it and then goes back. So we don't really need to credit petty cash. The only time we're going to credit petty cash if we return back some of the petty cash permanently. We don't need to maintain 200 anymore. Or we might need to debit petty cash again one day, and that's only if you want to increase the limit of petty cash that you want to maintain. Okay, so if in the future you wanted to increase it from 200 to 300, that means you want to increase it by 100. At that time, you will debit $100 petty cash and credit cash. But otherwise, if you're not increasing the limit, the amount you're maintaining in petty cash, or decreasing it, you don't need to use the petty cash account in any journal entry. Okay, so replenishment, you just credit cash $80. Now let's change this a little bit and find out what will happen. I'm gonna keep it $80 expenses, or one of them is expense, the other one is office supplies, but the $120 that we had on hand, I'm gonna change it and make it 118 instead. Okay, so we're just changing the scenario a little bit. Okay, now if he spent $80 and he has 118 left over, that means there are $2 missing. Okay, those $2 are not included in the invoices that he has for the office supplies and delivery expense. So in other words, those $2 are missing. Now the question is, who's going to be responsible for those $2? Is it the custodian, or is it the company will take care of that? In most cases, the companies, for a certain limit, they do accept shortages. We call that shortage. So we don't have to ask the custodian, because companies will understand that small amounts of dollar amount. I mean, small dollar amounts might be missing sometimes because of you might have paid a tip to someone and you just forgot, and then or maybe you're not gonna get a receipt for a tip that you pay to someone. So those small amounts, it's okay not to have receipts for them. Up to a certain limit. I mean, once it starts going high amount, then it's a different story. So it's just $2. The company will take care of it. So how different is the journal entry going to look like? Those $2 are not going to be added to office supplies or delivery expense. Okay, and the cash that will be replenished back to the custodian will be not 80. It will be 82, because remember that we need to go back to $200. If he has 118 remaining, that means we have to give him back $82 to go back to $200 petty cash. So the credit to cash will be 82 instead of 80. That will include the shortage. And then the debit side, we have to add $2 as well, so that we have our total debits equaling total credits. So I'm going to debit one more account, and we're going to call it cash short and over $2. Okay, and then that cash short and over will be an income statement account. The $2 will be negative in the income statement, just like any other expenses, which means that it will eventually decrease our net income, just like any other expenses. So that's how we will deal with it when we have shortage. Let's change it again. Let's make the 118, instead of 118 and instead of 120, let's make it 123. So this time we have more cash left over than what he was supposed to have. He spent $80, so his leftover should be less than 123, should be just 120. So how are we going to deal with the $3? Well, instead of having cash short and over in your debit, you're going to have another credit for the same account, cash short and over for $3, and then the cash that will be credited, it will be less than $80, because if the custodian has $123 and he wants to go back to 200, that means he doesn't need 80, he needs less than 80. We need 200 minus 123, which is going to be $77. Okay, so we will have two debits that will total 80, and then we will have two credits, cash 77 and cash short and over $3. We're not going to have a separate account for cash shortage and a separate one for cash overage, because it's not worth it. We're just going to have one account for either the shortage and overage, and then at the end of the year or end of the month, the debits and credits, which is shortage and overage, in that account, they will wash each other. And then if you end up with a little bit in the debit side, that means you will end up with a little bit shortage. That will be like an expense in your income statement, or you might end up with more overage, which is credit balance, which will be like revenue, and that will be considered other income in your income statement, which will increase your net income. Okay, that's everything about petty cash, and wish you all the best.